This is Trade Alive with IUX, where markets come alive and trading gets real. Let's go live.
This podcast is brought to you by IUX Trading Platform, elevating your trading experience.
Imagine a battlefield, but instead of swords and shields, the weapons are hand signals and voices. This is the Chicago Board of Trade in the 1980s, the legendary bond pit. It was loud, it was chaotic, it was physically dangerous, and standing right in the center of this chaos was a man they called the King. His name is Tom Baldwin. Unlike the cautious strategists we've discussed before, Baldwin was a fighter. He was known for his aggressive style. He wasn't afraid to step in front of the market and buy when everyone else was selling. He didn't just survive the volatility, he thrived on it. Year after year, while other traders burned out and left the floor, Baldwin remained, generating consistent, massive profits with a fearless mindset that became legendary. But here is the most incredible part of his story. Before he was a king, he was a factory worker. He didn't have a background in finance. He didn't have a degree from an Ivy League business school. He spent his days in a processing plant, doing repetitive work, just like millions of other people. So, the question is, how does a regular factory worker walk into the most competitive financial arena in the world and conquer it to become a legend? Welcome to Trader's Journey, a part of Trade Alive, brought to you by IUX Education. Today, we explore the story of Tom Baldwin, the man who proved that you don't need a PhD to beat the market. You just need the heart of a fighter. Let's step into the pit. To understand the hunger of a wolf, you have to understand where it came from. Tom Baldwin didn't start on Wall Street. He started in a place that couldn't be more different, a meatpacking plant. Let's zoom in on his life before the fame. In the early 1980s, Baldwin was a product manager for a meat processing company. His daily reality wasn't about charts or interest rates. It was about carcasses, packaging logistics, and cold storage. It was a stable job. It paid the bills. But for a man with Baldwin's intellect, it was a slow death. He described himself as bored out of his mind. Imagine waking up every single day knowing exactly what will happen. Knowing that your ceiling is fixed, knowing that no matter how hard you work, you're just a small part of someone else's machine. He looked at the older men in the factory, men who had been there for 20, 30 years, and he realized, if I don't do something now, that will be me. But breaking free is never easy, and the timing could not have been worse. It was 1982. His wife was pregnant with their child. Financial responsibility was weighing heavily on his shoulders. A prudent man would have stayed safe. He would have held on to that steady paycheck and the health insurance. But Baldwin calculated the risk differently. He looked at his savings account. He had managed to save up $25,000. To him, this money wasn't just savings. It was seed capital. He made a decision that terrified his family. He quit his job. He walked away from the salary, the benefits, and the security. He took that $25,000 and moved to Chicago. Now, let's be clear, this wasn't a game of chance. He wasn't relying on blind luck or hope. He treated this as a sole proprietorship, a sole man business. He used his capital to lease a seat at the Chicago Board of Trade. The lease itself cost him money every month. The clearing fees cost money. He was incurring operating costs just to stand on the floor. This is the part that most people miss. When Baldwin stepped into that trading pit, he wasn't playing the market. He was fighting for his survival. He had no plan B. There was no safety net. If his account balance hit zero, he wouldn't just be out of a job. He would have failed his pregnant wife and his unborn child. This extreme pressure created a unique psychological state. He later said that having no alternative was his greatest advantage. It sharpened his senses. It forced him to be disciplined. He couldn't afford to be wrong for long. He couldn't afford to hold on to a losing position out of ego. Every decision was a business decision, calculated to protect his limited capital while seeking growth. So picture him in those early days, standing on the edge of the chaotic bond pit, a former meatpacker in a cheap jacket, scanning the crowd of screaming traders. He wasn't there to hope for the best, he was there to execute a plan. He had $25,000 in his pocket, a baby on the way, and a burning desire to succeed. The venture had begun. To understand the legend of Tom Baldwin, you first have to understand the battlefield he stepped into, the 30-year Treasury bond pit at the Chicago Board of Trade. It wasn't just a workplace, it was a gladiator arena. Picture an octagonal pit, like a massive amphitheater, descending in steps. Packed into this tight space were over 500 men standing shoulder to shoulder, chest to back. There was no air conditioning strong enough to handle the heat generated by 500 screaming bodies. The air was thick. It smelled of stale coffee, sweat, adrenaline, and, most distinctly, the metallic scent of fear. This was the era of open outcry. There were no electronic screens to click, no algorithms. Trading was a physical sport. Traders wore platform shoes just to stand 2 inches taller, hoping to be seen by the brokers on the phones. They used their voices until they were hoarse. They used frantic hand signals to fight for every single tick of profit. If you weren't aggressive, you were invisible, and if you were invisible, you starved. When Tom Baldwin walked into this chaos in 1982, holding his $25,000 venture capital, he was a local. In the hierarchy of the pit, a local is the underdog. He was surrounded by the whales, brokers executing massive orders for giants like Goldman Sachs, Salomon Brothers, and Citigroup. These institutions had billions. Baldwin had what was left of his savings. But Baldwin did something brilliant. He didn't jump into the middle of the fight on day one. He stood on the top step of the pit, on the edge, and he observed. He treated the pit like a laboratory. He memorized the faces. He watched the biggest brokers. He noticed that when broker A raised his hands, the market usually rallied. When broker B looked nervous, a sell-off was coming. He realized a fundamental truth. The market doesn't move based on math. It moves based on the raw emotions, the fear and the greed of the people standing in this realm. Once he decoded the language of the pit, Baldwin made his move, and he didn't play it safe. While most rookies traded 1 or 2 contracts to minimize pain, Baldwin traded with conviction. His style was scalping, taking small profits from tiny price movements, but he did it with massive volume. He wasn't trying to hit a home run. He was hitting singles thousands of times a day. He became a machine of liquidity. The results were not just good, they were historic. Remember, he started with $25,000, money that he could not afford to lose. By the end of his first year, he didn't just survive the sharks. Tom Baldwin had become a millionaire. Let that sink in. In less than 12 months, he went from punching a time clock at a meat factory to making more money in a single session than he used to make in 5 years. He had conquered the arena. He reinvested his profits, compounding his account and increasing his trade size until he became the biggest individual trader in the room. He was no longer the underdog watching from the edge. He was now the king standing in the center. Now, we have to answer the million-dollar question. How? How did a former factory worker outsmart the best analysts on Wall Street? Did he have a supercomputer hidden in his basement? Did he use complex indicators like RSI or MACD? The answer is no. In the pit, there were no charts. There were no lines on a screen. Baldwin conquered the market by mastering the lost art of tape reading. To Baldwin, the market wasn't a graph. It was a living, breathing stream of orders. He didn't look at where the price had been yesterday. He looked at who was buying right now. His strategy relied on 2 massive pillars. Pillar number 1, know the players. Baldwin treated the trading pit like a poker table. He knew that not all money is equal. He memorized the faces of the floor brokers. He knew that broker A handled orders for a massive hedge fund, while broker B usually handled orders for nervous retail traders. If he saw the smart money broker quietly buying, Baldwin would jump in front of him. He would buy immediately, essentially front-running the massive order that he knew was coming. He didn't need to predict the future, he just needed to ride the wake of the whales. Pillar number 2, trade the reaction, not the news. This is perhaps the most valuable lesson Tom Baldwin ever taught. Amateur traders love to trade the news. If the Federal Reserve announces high inflation, amateurs scream, "Bad news, sell!" But Baldwin did the opposite. He waited. He watched how the price reacted to the news. Let me give you a classic Baldwin scenario. Imagine terrible economic news hits the wire. It's bearish. The price should collapse. The news breaks, the price drops 5 ticks, and then it stops. It hits an invisible wall. More bad news comes out. The price doesn't budge. Most people would be confused. Baldwin saw this as a flashing neon sign. He realized, if the news is this bad and the market refuses to go down, it means there are no sellers left. The market is sold out. In that moment of hesitation, when the crowd was frozen in fear, Baldwin would unleash his aggression. He would scream, "Buy!" He would buy thousands of contracts against the bad news, and almost every time he was right. The market would rip upwards in a massive short squeeze, because the truth of the price was stronger than the noise of the news. He proved that price is the only reality. Everything else, the news, the rumors, the analyst opinions, is just a distraction. By combining this psychological insight with his massive trade size, Baldwin didn't just participate in the market trends, he started them. Having a strategy is one thing. Having the stomach to execute it with millions of dollars on the line is something else entirely. This brings us to the core of Tom Baldwin's philosophy, the psychology of size. Baldwin wasn't just a participant in the market, he was a force of nature. He understood that size is a weapon. Most traders are taught to trade small to stay safe. Baldwin flipped this logic. He realized that if he traded large enough, he could essentially become the market maker. By offering to buy or sell massive quantities, sometimes 2,000 contracts at once, he provided liquidity to the market. But this size also served as intimidation. When smaller traders saw Baldwin stepping in with a massive order, they often folded. He used his capital not just to speculate on the price, but to bully the price. But how do you sleep at night knowing you are swinging positions worth billions of dollars? How do you not have a heart attack when the market ticks against you? Baldwin had a mental trick, a philosophy that every trader needs to hear. He said, "Don't think about the money, think about the points." He explained it like this. If you look at your screen and think, "Oh my God, I just lost a new car," or "I just made enough to buy a house," you are dead. The moment you attach real-world value to the numbers on the screen, emotion takes over. You become scared to pull the trigger. You become greedy. Baldwin trained his brain to view the money as simply a score in a video game. It was just points. It was just data. This emotional detachment allowed him to operate with the cold precision of a surgeon, even when millions were at stake. And finally, the most critical pillar of his longevity, ego management. In the pit, ego kills. Baldwin observed that brilliant traders often went broke because they needed to be right. They would hold on to a losing trade just to prove that their analysis was correct. Baldwin didn't care about being right. He cared about making money. His rule was simple. If you are wrong, get out. Immediately. He had no shame in flipping his position. He could be bullish at 10 a.m., realize he was wrong at 10:01 a.m., and be short at 10:02 a.m. He taught us that the best traders are not the ones who never lose. The best traders are the ones who are the best losers. They take the hit, clear their mind, and move on to the next trade instantly. Tom Baldwin left the trading floor years ago, but his legacy remains. From his incredible journey, he leaves us with 3 timeless lessons that every trader, whether you trade crypto, forex, or stocks, must memorize. Lesson number 1. Never average a loser. This was Baldwin's golden rule. He saw countless smart people go broke because they tried to save a bad trade. If you buy at 100 and it drops to 90, do not buy more to lower your average. Baldwin said, "If the market tells you you are wrong, believe it." Adding to a losing position is not investing, it is arrogance, and the market loves arrogance. Lesson number 2, patience is a weapon. We think of Baldwin as a frantic scalper, but his true skill was waiting. He didn't trade every tick. He waited for the screaming opportunities. He waited for the moment when other traders were in pain, when they were forced to sell at the bottom or buy at the top. He taught us that you don't make money by trading often, you make money by trading right. Lesson number 3, total commitment. This brings us back to the factory floor. Baldwin didn't succeed because he was a math genius. He succeeded because he burned his bridges. He put himself in a position where failure was not an option. He treated trading with the same grit and work ethic as manual labor. He showed up every day. He stood in the pit for 6 hours without a break. He outworked the Ivy League kids. In conclusion, the story of Tom Baldwin is a reminder to all of us. It doesn't matter where you start. You can start in a meatpacking plant. You can start with a small account. You can start with no connections. The market is the ultimate equalizer. It doesn't care about your degree, it only cares about your discipline. Tom Baldwin walked into the fire of the Chicago Board of Trade with nothing but $25,000 and a dream to be free. He walked out as the king. So the next time you look at a chart and feel overwhelmed, remember the man who stood in the pit and moved the market with his bare hands. Be aggressive with your goals, be defensive with your risk, and never, ever give up. Thank you for joining us on this wild ride through trading history. If you enjoyed this episode, please subscribe and hit the notification bell. We have many more legends to uncover. This has been Trader's Journey, brought to you by Trade Alive and IUX Education. See you in the next episode. Goodbye.
You've been listening to Trade Alive with IUX. Ready to put these insights into action? IUX is here to power your next winning trade.